Forward to this computer. All righty. Good morning, guys. Let's start off with the macro minute with Mr. Cash here. We're going to talk about some trades, some macroeconomics that are going on. Initial jobless claims came in this morning at 219. The estimation was 210. Previous was 203. So unemployment's actually on the rise. This is kind of part of the K-shaped economy sort of thing. K-shaped economy, if you guys are unfamiliar with the yield curve, is basically half the country owns the majority of the wealth, whereas half the country literally owns nothing other than debt, their credit card debt, car loans, they're maxed, that's a huge issue. So the K-shaped economy is everyone on the top side of the K, people that own assets, are growing at an increasing rate, whereas everyone that doesn't own assets is basically falling off a cliff. This is pretty much your last stance if you do want to escape the lower portion of the K-shaped economy. This might be the last pullback. We have debt to GDP over 130%. Huge issue. The Treasury's come out repeatedly over the past couple of weeks and just said, like, hey, guys, we're bankrupt. The country is in stagflation, which I talked about back in November. I think I had Louis Navalier, billionaire hedge fund manager on the podcast. And I was telling him if we back out AI, CapEx, data spend, we're basically, in a stagflation. And basically, like, we're not growing. People are getting laid off in record numbers. And typically we'd be able to increase money supply, buy back some of the debt, stimulate the economy, sort of thing, in order to get the ball rolling. But we can't do that because we already have too much debt. We're entirely bankrupt. To put some numbers to it, just for a frame of reference. So the numbers came up earlier the other day. Again, we just finished the first quarter, so we're just coming into the second quarter. It's like $640 billion that we've paid in debt interest. That's a problem, because if you were to multiply that by 4, we're talking about $2.4 trillion in debt interest payments if we don't bring down the deficit somehow or refinance at a lower rate. That's a massive issue. Last year, or in the past couple years, really, it's been about $1 trillion. They're only projecting $1 trillion. We're already 60% of the way there, and we just got into the second quarter. That's a really big issue, huge issue. If you want to think of like 2020, we're up, 250% in interest, just interest on the debt since 2020. We're on a really, really bad position. And you got to remember, in 2020, we injected like 10 times the amount of money, M2 money supply, into the economy to save it after the globe shut down because of the bug. So we're in a really precarious situation. I don't really know how we get out of it unless we stop this war, which we'll get into. PCE came out this morning at 3%. This is the Fed's favorite metric because they use it as a tool to measure the overall health and wellness of the economy, how people are doing, where are people spending money. There's my guy, Vance is in. What's going on, Vance? So let's go. We'll get into a couple of different things. I'm going to talk about some trading ideas. If anyone has any questions, please feel free to jump on. Iran's atomic chief is Eslami. I think I'm pronouncing that correctly. The enemy won't succeed in restricting Iran's enrichment program. That was this morning. He came out and said that. Basically, they're saying that they're going to do, and this is Iran's atomic chief. I don't really know what that means. I assume he's probably in charge of some sort of defense program. He's saying that they're going to keep on pressing forward with their enrichment program. That could, obviously that could be an issue. Iran is massive. There's no way, we're taking anyone out. We're talking about a mountainous country, people that literally live in, this caves, basically. Pakistan, there's a lot of people in those countries that live in the side of, the mountains. Sandra, welcome in. Thank you for joining. I am recording this, by the way. I'm recording this on, I'll put it up on YouTube and, all the different platforms later. I'm recording this on my laptop while I talk to you guys, in case anyone wants to jump in and have a conversation. And I'll post it for everyone to listen back to. So I'm going to put a deal together with CoreWeave this morning. Big $1 billion deal. I have 2x CoreWeave. I also have a long position. I had a synthetic position, which I closed out yesterday. A synthetic position means that I'm replicating the underlier up and down. I also did this with Intel. What does this mean? There's a couple of different ways to mimic a synthetic if you guys want options. So I was doing this, a buy, call, sell, put, same strike, same expiration, which mimics the movement of the underlier up and down, and you collect a pretty handsome premium on top of that. I had a covered call on it, which was going to get destroyed. So that's why I closed it out early. Took a bunch of profits, made a couple grand in profits from my synthetic position yesterday. It's really quick, doesn't take very long. Why did I close out my covered call? Because if you have a covered call on a synthetic, say the covered call, in case you guys don't understand, a covered call is when you own the underlier and you sell a call at a specific strike price. Now, say it's 100. If the stock runs up to 120, you are short the stock. And typically, with a regular, say if you're doing this Apple or Amazon, your shares just get called away. With a synthetic, it doesn't get called away. You have to facilitate the trade and you have to close the trade. Where this becomes an issue is that if you were doing a synthetic covered call and your call gets called away, you're actually naked the call, meaning that you have unlimited downside. Well, I mean, the call is just going to run up and you have to cover that distance. So if your call is at 100 and it runs it to 150, you have to cover that spread of 50, and you better make sure that your synthetic is making enough premium on the other side to cover that short call. So that's why I did it. I gave up. I gave up a little bit of the a little bit of the upside in the covered call. Gave back like $200. Made a couple grand of the synthetic. Aja, welcome in, buddy. And so that's what a synthetic is. Lois, thank you for joining. So that's what I did with CoreWeave. That's what I did with Intel. Intel locked in a deal. CoreWeave locked in a deal this morning. I hope you guys, made some profits on that run up this morning on CoreWeave. It was up like 17% pre-market, and then people took profits, obviously. Let me see. Russia offered LNG to Asia at a 40% discount this morning. So that's pretty interesting. Iran has told ships to use the passageways around Larek Island to the north and the south. I believe they put something in the strait. I don't want to say it online and get like demonetized. But they got something floating in the water. And they're saying basically like, yeah, don't go over there. Use this passageway around Larek Island. There's a north and a south to it. There's also a point of contention right now. Well, we got a couple. We have the issues with Israel is striking Lebanon. Lebanon is a friend to Iran. Iran's saying like, hey, you can't do that. And Israel and the U.S. are basically saying like Lebanon was never part of the ceasefire. So I think that as of this morning, Pakistan was negotiating some sort of agreement between all parties. So hopefully that works. God, I hope so. because I'm sick of this personally. But the second point of Iran's contention is they want $2 million per ship every time they have to pass through the strait as a toll. I thought $2 going through like New Hampshire was expensive, or like $4 when I got to drive through New York. $2 million per ship to pass through the toll is insane, but that's what they're arguing. Our president is saying like, hey, maybe we can get in on this action, and we'll protect your tolls. You know, let's see how that pans out. Maybe they come to some sort of agreement. Trades. The trades I'm looking at. So I want to go over an interesting trade. It's called a short interest matching RSI. So this is a unique trade. Most of you guys probably have never heard about. I don't know how many of you guys are options traders in here. What this is you have the float or the shares outstanding, and I'm going to give you guys an example. And this is days to cover matching with RSI. And this is it's an indicator you can use if you want to short a stock. Okay. So I'm going to give you guys an example. You have 50 million shares outstanding. Shares sold short is 10 million. So it's 10 million divided by 50 million equals 100. You get a percentage, it's 20%. So and then you have days to cover. Okay. So if you have your daily average volume equals how many days to cover. So if it's days to cover is 10 million divided by average daily volume is 5 days to cover. 10 divided by 2 is 5. Okay. Where this is going, if you get a stock with a days to cover above like between 8 and 10, that means that there's a lot of short interest on that stock, and people are betting against it, and it's starting to, or borrowing against it to short the stock, and it's becoming overvalued. How you can match this with RSI is once a stock reaches above, say, 70% RSI, which means that it's significantly overbought. Like people are just buying and buying and buying because whatever, they might have saw it on, X or Instagram or whatever, but there's a lot of short interest building up. It's getting ready for a gamma squeeze. So for instance, Avis car right now, Avis car rental has an RSI about 80 with an 8 to 14 day to cover short interest. That's a problem that is in short territory. There was a couple oil companies that also fit into this earlier this week. The RSI is down after people took profits. We'll see how that pans out later. But that is a good indicator of how to short a company. Anything above 10 is like a immediate squeeze. You're instantly looking for like a gamma squeeze. I hope that makes sense. If anyone has any questions, please feel free to jump on, request a mic. There's 2 dates for this that you guys should all be aware of. This, the information is, this short interest chart comes out twice a month. It's usually around the 15th. Is the release date? Sorry, the issue date when people when people want to buy these shorts, and then it's actually getting, the data is publicly getting released tomorrow, the 10th. And then the next information is on March 31st. So settlement is April 15th, gets released on the 24th. But there's twice a month that this information will get released. If you guys want to know what companies are being shorted, you might want to take the opposite side of that bet. Right? If you know that your GameStop or whatever is getting shorted, this is kind of what happened back in whatever it was, 2020, 2021, when there was a huge short interest on GameStop. All of the people on Discord or Reddit or whatever took the opposite stance, and it cost hedge funds, a couple $100 billion. That's where you're going to get this information from. Again, it's public information. The list comes out twice a month. You guys should all be aware of that. The next is the covered call. So a lot of people are doing this, and I forget who it was. Someone had asked me to explain how to sell options last night. And the idea with the covered call is, say you're long the position. Michelle, thank you for jumping in. If you are long the position on the covered call, you still have 100% risk the downside. So if you got an Apple could theoretically drop to 0, and you're going, well, I got in at 200, I can sell covered calls for 225. Okay, that isn't a problem. But when you start going down, say if Apple, I'm not saying that this would happen, say Apple drops down to 150 or Amazon drops to 150, and you're like, I'm still going to sell above my cost basis. There's two sides to the call option and the put option for that matter. That premium that you get from selling a covered call only comes from people buying the call. No one's going to buy a call at, say, 200 if the price is at 150. That would be stupid, right? So the premiums get washed away entirely. I hope that makes sense, because a lot of people think that you can just forever sell covered calls, way above strike. The issue with that is when, again, we get into one of these short positions and the RSI, drops significantly low, and people go, hey, I'm going to buy here. And all of a sudden it rallies like CoreWeave did this morning. Then all of a sudden, like, you sold a call to try to average down your position, but you might be still down. Well, now you're screwed. Now you might get called away when you have one of these, reversion to the means. So you have to be very cognizant of the covered call. If this happens, right? So say you're in for 200 and the price falls to 150. Tesla Groupie, thank you for coming in. We're just going over covered calls. If the price drops to 150 and you're like, I'm going to sell above cost basis at 200, there's no premiums, so you drop down to say 160 because you're trying to average down your position with premiums, and all of a sudden it rips back up. Well, now you have NAV erosion. Now you just sold, your position short, and you get called away. You have to eat that difference, the difference between the 160 and the 200 cost basis. So that still ends up being NAV erosion, even when you don't intend it to be. Again, if anyone has any questions or wants to jump up, we're just kind of going over the macro of what's going on and some different strategies. We'll be on for an hour. Venture, what's going on, buddy? So yeah, Avis budget car rental right now is in prime state to short. If you guys wanted to short that, again, it has an elevated RSI above 80 with about a 14-day to cover the short interest. That is an issue. So I'd be looking at shorting that. A bunch of people took profits on shorting oil companies the other day when we had that reflexivity. Covered calls, we just discussed that. Requested. Let me see, add as speaker. Venture, you are on, buddy. What's going on? Seeing what you got going on. So the option is, the most of the people on X right now are very linear. They know how to sell a put, they know how to sell a call, and that's basically like where the road stops. They don't think of, if you were to drop a ping pong ball from your ceiling, you have no idea which direction it's going to go unless you overlay it with all these different indicators, factors. You need to know, what's going on with the global economics, the macro environment, the dollar index. So you need to have as many tools in your toolbox and trading strategies as possible. Give me a stock that you're. Oh, actually, you know what? Do you know how to sell a covered call or a cash secured put? Let's go through it so everyone is on the same page. We're just going to use a basic example that everyone can relate to.
0. I know I do requirement cover on my notes because I'm like, I know I was doing those, but yeah, the terminology is a little off.
Okay, so I want you to pick a car you really want. Go ahead.
T3.
Good choice. And what's the asking price for this car, sir?
Maybe 250, maybe.
Okay, 250. If the chances are, like I'm going to assume you have the cash or you have financing to get this. If Crypto Fit, welcome in, my buddy. Venture, if I could sell you this car for say 225 and in 30 days, and as a reward, as a hassle, I'm going to give you $5,000 right now to lock up your 225. Would you take that trade? All right. So 30 days comes, and I have your what color you want? Lime green. All right. I don't think I've ever seen those, but all right. So what's your cost basis now? I'm going to give you your car for 225. You just bought it, and I gave you $5,000. What's your cost basis? Nope. By the way.
Oh,
220. Very good. Okay. So you just did what's called a cash secured put. Congratulations. Maybe you don't like this, GT2. You want to really go up to the GT3 RS, and you say, hey, I'd like to sell this back to you, but I actually think I have a buyer. Like the value of the GT2s are going up, and I think I can sell it back into the market after you've driven it for a month for $250, and I'm willing to give you another $5,000 to lock that up. You promised to sell for say $250 in 30 days, and you get another $5,000 as a hassle. Would you take that?
That sounds pretty good.
All right. So what's your new cost basis?
It's still going the other way.
Well, think about it. So you've given, so you bought the car for $225, and you've collected $10,000.
Okay, 215. I got you.
215. Great. So 30 days comes around, and I say, hey, I'm ready to take delivery. I got a buyer for your lime green GT2 RS. Are you going to take that?
Yeah, that's easy money.
Great. So what is your profit now if you're in for 215 and you just sold it for 250?
35,000 profit.
There you go. You just sold a covered call. You just completed the entire wheel strategy. Welcome in, Scotty.
That's pretty interesting. Now, on a covered call, that's not where you have to have the shares available.
Yes, that is. So the term covered means that you have the shares available.
Got you.
Okay, and because you had the car available, you can thusly sell the car. Does that make sense?
Yeah, that makes a lot of sense.
So it's no different than Amazon or Apple or Meta or anything else. You already have the shares. You're willing to collect some premium on it. Now, let me ask you this. I'm the dealer, and I'm like, hey, man, I'm so sorry. I don't have a buyer at 250. But if you're willing to wait another 30 days, I'll give you another $5,000. What's your new cost basis? Very good. So it's like a layaway program, right? Does that make sense? Right. And at any time, I come to you and you're like, you know what? I really kind of like my GT2. I think I'm going to keep it. All right, great. Keep the 15 Gs, and you're looking pretty well.
Oh, yeah, that sounds good.
So we just went through selling a cash secured put and selling a covered call. The issue, right, is that if all of a sudden the GT, 2 falls down to 200, and I only have people willing to buy at that price, you have to adjust your strike price. So now you might be short the stock and not be able to collect as much premium. And that's where covered calls kind of have an issue, is that, theoretically you'd always want to sell above your 225. But if there's no buyers at 225, there's no premiums to be. All right, I'll give you $100. You want to sell it above 225? Fine, I'll give you $100. They're like, wait a minute. Last week I was getting $5,000. That's the issue with covered calls. Is there's two sides to this. Someone has to be willing to pay the premium on the call side, on the buy call, in order for you to collect it on the sell call. Does that make sense?
Yeah, that makes sense. I have a question.
Yes, sir.
So would this be something where the charts would come in handy, say for instance, I know something right now that's bottomed out. I'm talking about it's never been no lower than where it's at. That'd be something to just scoop 100 shares, potentially. I don't know the value of them, just saying potentially. That would be like, if you start selling covered calls, theoretically, unless the price went below those bottoms, weekly bottoms, it would probably never get you in there.
So I have a phrase. It's a great question. I have a phrase. It's called "Don't take a trade unless you get paid." Okay. So if you are thinking that you want to own something, now again, only do this if you want to own it. Do it with a cash secured put, and only do this if you plan to hold it. Okay, because otherwise you're gonna buy something that you go, oh, it's bottomed out. I don't really want this. I was just trying to collect premiums. That becomes an issue.
But that's kind of how when I first got invested, I only bought the stocks I actually like. So you should probably do it like that. Like you actually a little passion project or something like that.
Yeah. So you want to stick to that, right? So think of Warren Buffett, right? He tells everyone else to be an index investor, although he's never bought an index in his life. He's kind of hypocritical in that notion. He has used cash secure every time Coca-Cola and Apple fell. He used a cash secured put, bought them at a discount, and he collected free cash flow ever since in dividends because he was long the stock. He just wanted to hold it. Why not get paid to hold it and get it at a discount? Okay. Crypto, what's going on, buddy? Crypto, you got the mic. Unmic it. Unmute it. All right, I guess Crypto can't talk right this second. I'm just going to. Crypto, you there, buddy? We can't hear you. Crypto, you're not picking up, bud. Kind of there, kind of not. I think it's dropping on him. We'll just go over some more macro stuff while we're waiting for Crypto to get his mic. Asia's running out of oil. That's a problem. I assume, let me see, senior White House advisor has it. Once Hormuz opens, gas prices will fall relatively fast. I assume he's referring to gas at the pump, not LNG. So Russia is giving, if you guys weren't on earlier, Russia is giving Asia a 40% discount on LNG. They have a ton of natural gas. I don't know if I told you guys this or not. Venezuela just but bought from America, I think it was 600 kilos, 680 kilos of gold. You guys thought I was going to say something else. That's just laughing. Yeah. Again, the U.S. economy is hurting. We're really hurting. We have so much debt. We can't refinance it. The Fed's pretty stuck on this. They don't want to refinance the debt. Norbert, thank you for joining in. They don't want to refinance the debt because they can't. The Treasury is broke. We are paying more interest collectively on the debt. Again, it's a roughly around $2.4 trillion this year. In comparison, the Defense Department and Medicaid are significantly less. I wrote it down. I believe it's, let me see. I think it's like $1 trillion, $1.5 trillion on the defense and Medicaid. So we're paying more on debt than we are Medicaid and defense collectively. And the president has announced that he wants to increase the budget for the national defense to 1.5 trillion, which is insane. Tessa Groupie, what's going on? We got some great listeners in here today. Venture, what else do you have going on?
Trying to look at my trade. Trying to look at my trade. Trump doesn't reverse on anything. I tend to try to correlate those things with trade and things like that. Sometimes the literally matching up. And on the 4 hour, watch it bounce up back. Waiting for it to start getting south. It's already starting to do that. I'm trying to see if I guess go with some of the news that I'm expecting. Maybe just natural pattern today.
Oh, very cool. That's a group. What do you got trading?
Good morning. I just woke up, so I sound like I just woke up. How are you doing?
I think everyone's going good. Can we get like a 100 or a thumbs up for Tesla Groupie? How are you guys doing?
Good. Oh my gosh. So you guys were talking about covered calls, and I own, I trade leveraged. One of the wild ones, and so I have some AMDL shares that I was assigned like 2 weeks ago, and so I sold a $15 covered call for expiring tomorrow, and I thought, oh, AMDL will never hit 15 by the 10th, and here we are at 16. So that's kind of the way that covered calls can screw you a little bit, but I'll make profit on it, but I will not make $100 that I would have made if I didn't have the covered call. They can kind of cap your profits too, so you have to be careful with covered calls.
So what do you like trading, Tesla Groupie?
Mostly leverage, so AMDL, which is 2x leveraged AMD. And the reason I like these is because one, they move fast and they move hard, and I like that. And I am obviously bullish on AMD, and I think that it's gonna, run back up here pretty soon if the market can hold up. So, it's 2x leverage, but they're also a lot cheaper, so I can get 100 shares so that I can wheel it. Whereas like I can't jump in 100 shares of AMD. I mean, I can, but I get one contract, and that's it. So with this being between 10 and 15 usually, I can get multiple shares and easily be able to wheel it. So I like that one, and I really, of course, my all-time favorite is TSLL.
I just jumped back into that.
Me too. It's back down. Like, I said, I'm not going to be trading this thing up at above $16 because I just don't want to be assigned so high knowing how quickly it can drop. So now that it's back in my sweet spot under 12, I'm going heavy. I'm going heavy again.
Walk through that. What do you mean by, it's below 16? Explain it to the people who don't understand, because I'm sure they're sick of listening to me talk.
Okay. Well, I've been trading TSLL for years since it first opened up, and it was like $6 a share. And at that point, they didn't even have options, and then they had monthly options, and so I was just buying shares at $6, letting them run up and selling them back and forth while I kind of got to know the stock or the ETF. And then I've been in and out of it ever since then, from $6 up to, I think it was like 20 something, and then it dropped down to 6 again, and then ran to 41, which I don't think will happen again, but that was fun. Then dropped back down to 6, and now we're in the middle. So my sweet spot for it is between $10 and $12. So I like to sell cash secured puts at or below $10 to be assigned. And then if I'm assigned, sell covered calls at or above $12. So you can get the full wheel going. And I picked that sweet spot because if you're under 10 and it drops to 6, you're not completely screwed. You can just kind of, wait it out a little bit and average down, and wait for it to go up because it won't stay down for long. We all know Tesla. It'll drop, and then and right now it's getting kind of beat down, which I like, because once it starts getting beat down, once it starts getting downgrades and bad news and all this nonsense, it just really gets beat down and then it flies. So for me, it's a good opportunity to, if you're a shareholder, to dollar cost average, or if you want to trade TSLL, it's a good time to start selling some cash secured puts. And I got assigned some on Friday because I did not expect it to drop as much as it did. And about a $12 cost basis on those, which that's fine because I want more shares. So it'll, I can start averaging down on that. So that's no big deal. Last year during this time, during the tariff news, I was out of the country. And so the market just, took a hit. I got assigned all these shares at $14 and $12 and $10. And as it dropped, I was being assigned. I ended up with 2,900 shares at an overall cost basis of $12. And I just kind of waited. And by September, October, it had run up to $23. So it made 2025 my most profitable year in the stock market ever. I'm hoping to do that again.
So for anyone that is listening, what would you, so say you're in your position and they get assigned at 14, what do you normally do to get out of it?
It depends on how many shares and obviously how much buying power. I mean, if it's taking up all of your capital and it's just going to sit there doing nothing and you can't really sell covered calls and you can't average down, you either have to wait it out or you have to just cut losses, because it could be a while. Tesla, and then they run. So it just depends on your situation. But for me, I would try to sell cash secured puts below $6 and try to cut that cost basis, down as low as possible and accumulate as many shares as I can. Also, if you're at that average, you can sell cash secured puts, and then you can take once the contract is closed, the trade is completely closed, and it's actually profit, not just premium received. You can take that profit and use it to average down on your shares to adjust your cost basis. But of course, you have to keep a separate spreadsheet so that your platform will do that for you. But you can get your cost basis down. I mean, there's just so many ways to trade it. I was just talking to somebody in my group about he was assigned $18. And he's like, should I just cut losses? And I'm like, no, I'd pull 100 shares out of that lot, out of that total, make it a separate lot of 100 shares at $12, put the remainder into the other shares and start selling covered calls against just that one lot. So anyway, there's just so many ways you can play this, and I'm obsessed. I love TSLL, so I'm very, very happy it's back down.
So the other strategy I was just discussing with my Discord last night was a lot of people will do what's called a put credit spread. And the put credit spread, for all of you guys who don't know, is you sell a put, say it's for 10, and you buy a put, say for 8. And the idea is that you use the credit from the sell put to pay for the buy put, which is great. You still collect a little bit of credit, and you're subjugated to your width, meaning the delta between the two strikes, between 8 and 10. The other, if you take the inverse of that, which is if you're like, hey, look, I want to maximize my loss here, you could do I don't know, say your position's at 12, you go, look, I only want to take maybe like a 20% loss, or maybe it's 18%. I'm going to do a buy put for 10 and a sell put for 8. Now it'll give you a little bit of a debit, but the theoretical how this works out is as you fall into below 10, all of a sudden your buy put starts making you money, and as you approach the sell put, you have the chance to you've been gaining theta all this time, as it gets closer to your strike, you could adjust that strike down lower while still protecting the rest of your portfolio. Have you ever tried anything like that?
Yes, and actually, I just in your thing here, I just posted a little short video that I did on YouTube about it because it is good for people that have smaller portfolios and or don't necessarily want to be assigned shares. And at the end of it, if you want to be assigned the shares, you can, close out the bought put and then let the shares be assigned on the sold put if you really wanted to. But I love those as well. For me, I don't do it often because I am selling cash secured puts on things I do want to own. So for me, it's kind of, I'd rather just let them be assigned. But for smaller accounts, I think it's a great way to trade. And you can do it the opposite way with covered calls by selling the call and buying the call. So yeah, I like it. I think it's really good for small accounts, and if you don't necessarily want to be assigned a share.
Does the SOFR rate ever concern you?
No.
Okay.
Not really.
For me, yeah, kind of. So for anyone who's not familiar, say you have an ETF that uses any sort of swaps. The SOFR rate right now, I think it's 4.69% annually. So you have to factor that in, that money, plus, and it's not included in your expense ratio. If you guys have any ETFs, they because it's a fluctuating metric, they can't include it in the expense ratio. So you have to factor that back in if you have, anything that's using swaps, including leveraged funds. You have to make that money up because it's going to get removed from your NAV every morning.
Yes, that's right. That is right. And another thing about these leveraged ETFs, if anybody's interested in trading them, is like the decay of them. And so it is important if you decide you want to trade in one of these leveraged ETFs that I just mentioned, that you understand that if you are bullish on Tesla and you want to invest in Tesla and you just want to buy and hold, you need to buy and hold Tesla. Don't go in on TSLL. It is strictly for trading. And if you look at a 1-year chart of Tesla and you look at a 1-year chart of TSLL, over the year, Tesla is going to be higher. So you would make more money buying and holding Tesla. So these TSLL, I am not buying and holding. I'm not putting it in my long-term portfolio. None of that. It is strictly for collecting premium, letting the shares run up when I'm assigned, selling covered calls, making profit, and getting out of it. It's not, some people think that it's not even good to hold them, a month or two. I disagree. I've held them for almost a year. And as long as I'm selling covered calls and bringing in, consistent income with them, and then they run up and I can sell them and make a good profit, then it's done what it's supposed to do. I'm not trying to, invest in this long term. I do invest in Tesla, but that's separate. So it is important to really understand what you're getting into when you get into leveraged plays like this. But you know what? There's some other things that I've been trading that have a nice high IV, and I am really enjoying them. And it's RCAT, RCAT, and ONDOS. Those are drone stocks, and then also, what was the other one? Oh, and of course, BBAI. I don't know if anybody's interested in that one, but it's very, very cheap, and it moves a lot. So those are some that aren't leveraged that have a nice high IV as well, though.
So RCAT right now is down 5.33%, and ONDS is down 3.28% today. So in this case, right, you would, if you are long the stock, you'd want to sell a cash secured put. Is that what you're doing?
Absolutely, yeah. And RCAT, I would want to get in under 12. My group and I, we got assigned a bunch of shares at 8.50 a while ago, and it dropped. It continued going down to like 6. And then, of course, we made the mistake of selling too many covered calls against our position, and then it ran to 17. So we had capped our profits pretty significantly. I'm trying to get back in slowly. I've got 100 shares left at an 8.50 cost basis, and I've got a $15 covered call expiring tomorrow. So, I'm just kind of holding it and wheeling it, but the majority of my money's going into TSLL right now. So.
And what is your delta that you aim for? Are you a delta girl?
I'm delta. Yes, if I'm trading a normal stock like RCAT, I'll try to get in under 20. But with leverage, it's pointless. I mean, you could look at delta all day long and it'll blow right through it. So for me, I don't. I just have my sweet spots where I would be okay being assigned, like TSLL under 10, and then I just go from there. And then I pick that. I would pick a $10 or less. Right now I'm good with an $8 because we're in the $10 range. I would just go with an $8 strike, cash secured put or lower, and then I would pick my expiration date, to see the, what premium I can collect and all of that. I don't really look at the delta on leveraged. Do you? You trade leverage too, don't you? Sometimes.
I do trade leverage, but I take an entirely different approach. So I do have TSLL as well. What I am doing is I am long Tesla. So every time I sell a cash secured put on TSLL, I'll take the premiums and I buy like one share of Tesla. That is my goal because I'm long Tesla.
Smart. I do have one quick question about that.
Of course.
Do you consider, everybody's different on this, do you consider premium profit before the trade is closed?
Oh, good question. Is it profit before the trade is closed? It depends, is my answer. I run a very unique strategy where my portfolio is like zero beta. So kind of the answer is yes and no. If your relative portfolio has a beta, say, of 2, you're in only Tesla, NVIDIA, high IV, you're running crazy, but you have no defensive sector, then no, like the profit should be, when you close the trade entirely. But if you get total alpha like I do, from being beta neutral, then you're collecting options on either side, and it's really kind of irrelevant because you're always going to have one side down, one side up. I don't know if that answers your question.
Yeah, that makes sense. I'm cut and dry. I don't consider it profit until I'm out. Only because if I end up buying it back, for some reason, or I end up rolling, then it creates a bunch of confusion. So for me, I get in the trade. Let's say I collect $50 in premium. I say I collected $50 in premium, but I do not call it profit until I'm completely out of the trade. And then, if I make the 50, if it expires worthless and I make the 50, or if I have to buy it back for 5, I decide to close it early and buy it back for 5. Well, then I've made $45 profit. So I just don't call it profit until I'm out, completely out.
Yeah, that makes sense. I actually set automated order fills to lock in profits. So if I collect, say, I don't know, $50, I'm looking at, or we'll say $100 for easy math. If I want 70% locked in profits, I'm going, as soon as I take the cash secured put of the covered call, I am going to, set to close for 30 cents, good till filled. So I'm locking in 70% profit as soon as it hits that because of theta, especially with these 2x funds. Mm-hmm. And I just get the notification instantly and I just go, okay, great. Now, if it's something like, SPX or SPY, well, then I'm looking at maybe 50% profit just because it moves so violently in either direction. And you're talking, big notional values. I don't want to get assigned at, $600,000. That'd be crazy.
Yeah.
Do you worry about pinning risk?
No, I don't even know what that is.
All right, so pinning risk. So the difference between U.S. stocks and European stocks. How this works is, so if you say you were to sell a covered call for Friday expiration at $10, and it's like $9.50, by 4 o'clock, and you're going, on your TSLL and you're going, hey, look, I'm going to expire worthless. Technically, if you are the person buying the call, so say it's earnings season and it runs up to 10:50 after hours, the person who bought the call can actually call their broker up until 5:30 p.m. and take assignment of your shares. That's called getting pinned.
Shut up. I didn't even know that was a thing.
Yep. But that only happens in US markets. So the reason why people will trade the European is because everything European, like SPX, settles in cash. So there's no chance of it of you getting anything taken away. Yep. Anyone who buys calls, if for some reason after market, after earnings, the price runs up, you can call your broker and take those shares.
Wow. Do you ever trade SOXL or TQQQ?
TQQQ. I do have some TQQQ. I was doing SPXL forever, which is a 4x leverage. TQQQ is 3x. I did a ton of that last year. Right now, I'm just focusing on. I'm not really trading them right now, to be honest with you. Right now, with everything that's going on, because again, if it's down 3x or 4x, plus you're playing that SOFR rate every single day, plus the expense ratio, which ends up being 5.5% annually, you got to make that up somewhere, and it's getting removed from your NAV every day. I don't want to be stuck in that position, and so I am right now. I'm doing cash secured put. Like this morning, when everything is down, I'm doing cash secured puts on staple products like Walmart.
Okay. Yeah.
Because again, I'm trying to aim for beta neutral.
Right. Yeah, that makes sense. Totally makes sense.
If I were to do that, though, I would have to buy a put on like an SPX mini to get rid of some of that volatility.
Yeah, that makes total sense.
Or 3 puts for that matter, if it's 3x.
I would love if they would bring more 3x or even 4x leverage into the market. They talked about it a little bit last year, and then I think they were even discussing like a 5x. Then it got, it was a big
Tell me you're a degenerate without telling me you're a degenerate.
I mean, okay, I'll admit that I am. Like, I have no problem admitting that I am. But I feel like, you know what, if I'm selling, which is, in my opinion, one of the safest ways to trade options in the stock market. And then I add that little bit of, extra to it. This is not my income. It's not my livelihood. I own a business. I own a hair salon. And so, this money it's a hobby, and it's for me learning. I've been doing it for years, but you're always learning. Like, you never stop learning in this, and you learn what not to do, and you learn what to do. And then you even learn what not to do again, because you'll do it again. Like I did this year with BM&U. I decided, I had this huge high IV, and I'm going to get into BM&U. And I got burned. So I knew better. I knew better when I was in the trade, and I still did it. So, you'll learn. And then by the time I'm ready to retire, hopefully I have learned so much that I can, have a nice income monthly when I'm not working anymore, which will be years and years and years from now. But it's still something to think about, and it would be really nice to be kind of almost make up my income with selling options. So whereas you take your profits and you put them into Tesla, I take my profits and I keep them in this account so I have more to trade with. And I'm really just trying to actively build my account, so that I have a lot of money to trade with when I'm ready to use the money for something else.
Okay, so let me ask you this. And I've asked a bunch of people this. No one's been able to come up with a reasonable answer. If you think of everyone's, knows what the 4% rule is, you multiply your annual expenses by 25, you get whatever that number is, you divide it by 4%. And that's the amount of money that you could theoretically withdraw from your account and never run out of money. How do you factor that with options?
Oh gosh, I have not even thought about that. Haven't even thought about it.
But if you're going to live off your income, how are you going to do it without having a portfolio NAV erosion?
Yeah, no, you're right. And see, these are the things I would have to think about and learn and understand before I actually take that plunge, which again, that's a very long time from now. But, yeah, those are definitely things I would have to learn about. Maybe you should do a little class on that for people.
What?
Learn and want to live on their options in profits.
So I'm glad you asked that. I'm actually going to run a beta test on this upcoming winter. I put my kids in private school, and so they can do it online. And so this next coming winter, I'm leaving Cape Cod and I'm going to Florida for the wintertime. So I'm going to actually run a beta test and see if what's going to work for me personally. And see how much I can generate from options. Last year was disgusting, and right now I'm waiting for my accountant to get back to me because I owe a ton of money in taxes because I generated a lot of premium. Are you putting anything aside for the premium? That's the groupie. I know you're profitable. You don't got to be shy.
Oh, you mean like for taxes?
Yeah.
Oh, well,
no.
That was that. That's not good. So this year, I'm down. Like I said, on BMNU, I'm still holding the shares and I'm selling covered calls under my average until they get called away, and then I'll take the loss on it. I'm hoping crypto will recover by the end of the year and maybe it'll run up. Who knows? Anyway, so I don't know. Until I'm kind of out of that, I'm thinking, how much am I going to have to pay in taxes? Because that might take quite a bit off. So no, I have not been this year or last year taking money out for taxes. And capital gains, that can be very, very high. So that is something that people should consider when they're options. I would take a good 20% out at least.
And where would you park it?
And keep it on the sidelines. Probably just in a high yield savings account, something that you can access because you'll have to get that money back at the end of the year.
Like an SGov or like a short-term treasury?
Maybe, yeah.
Okay.
In a stock. I've done that before. A few years ago, I would take that money and I just kind of put it in Amazon, and this was years ago. And Amazon tanked, and when it was time to pay taxes, I was like, "Oh crap! I can't pull it out," because Amazon was down, which was at the time it was very unexpected. Amazon was having a bunch of good news and all the stuff, and then it sold off. So I wouldn't recommend putting it in a stock. It needs to be in something, safe like that you can access at the end of the year as well.
Yeah, that's right. So like something with a risk-free rate of return, right?
Yeah, and you know what? I want to learn about. There's something that everybody parks their money in, and it is a stock or ETF.
I think it's SGov.
Maybe I can't remember what it is. I was going to research it.
I think that's what Dividend Millennial's doing. He's actually really an options trader. He doesn't actually buy dividends. He's an options trader. He lives by me, and we meet up with our buddy Mike from Vista Shares. But yeah, he's more of an options trader, and I think that's what he does.
Okay, yeah, and it's got what, like a good dividend, or what is it? A dividend or just a high?
Yeah, it's basically a dividend, and I think it holds like short-term treasuries. That's all it does.
Okay.
And it just pays out a monthly dividend basically on your holdings. Yeah, Elijah's giving us a thumbs up.
Okay. And does it drop though after? Now I'm not a dividend investor, so I might sound completely stupid here, but dividend stocks usually drop after they pay out. Is that right?
That is correct. But it recovers when people reinvest, which everyone just reinvests it because why would you? I mean, it's a theoretical risk-free rate of return. Why would you sell it? And no one ever does. Anytime a dividend is released or a premium, it comes directly out of the NAV. The problem is that when people, it never recovers because either the trading sucks, like there's some ETF companies who have horrible trading strategies, and that can be problematic. The price never recovers. But these are treasuries, right? So the entire world is buying them.
Okay, gotcha.
And they're guaranteed by the faith of the United States military.
So very different than our high yield ETFs that you and I jumped into a while ago.
Oh, yes. Do you want to tell people about that, or should I break the ice?
I'm still holding my TSLY because at this point.
Oh, my God.
Oh, yeah.
You're a savage.
They're paying me $45 to $50 a week, every week. I'm down 37% on the shares. That's never going to reach. So I'm like, you know what? At this point, I'm just going to leave it and collect my $40-50 a week. And it's a weekly payout now. So at this point, I'm like, I can either take the loss. Honestly, to be honest, if we added up all of the dividends that I've received since I bought these shares, and I do not drip, I do not reinvest. I just keep what's there. If we added up all of the dividends I've received, it is more than the amount that I'm down. So overall, it's in profit if you just wanted to sit there and hold it forever. But for now, I'm just like, okay, you know what? I'll take $40-50 a week and call it a day. So that's what I'm making on it right now, and I'm just going to leave it. I kind of consider it like if I had a rental property and I put the money into the house and somebody's paying me rent each month, and I have no intentions on ever selling this house, or and I'm just going to collect rent forever. Kind of the same thing. Now, would I do it again or buy more or put more money into it? Absolutely not. No way. And I know so many people that got screwed so bad on that MSTY this last year. Oh my God.
On Misty or Tesla?
Misty.
Oh, Misty. Oh, yeah.
I'm really glad that I'm not I was never in that one.
Well, I kind of have the same issue with, even though I'm long Tesla, because I'm long Elon, really. That sounds weird. I think I just said that backwards. Long Elon, long. That sounds weird. The issue is that MicroStrategy was like 400% over leveraged. And when it reversed course, everyone didn't think anything different. Tesla is right up there. I think it has a price to earnings ratio of like 350%. It's something ridiculous. Whereas the rest of the Mag 7 sits around 27. So that the price to value ratio is like non-existent. And MicroStrategy was in the same course. I don't believe in Michael Saylor. I believe in Elon.
I'm going to say Tesla has a cult following because of all the different things that could happen in the future. MicroStrategy does not. That's in my opinion, that's a big difference too.
You left out the details. So how I met Tesla Groupie here is we had a bet who could get more Tesla faster. And her and I were just going back and forth for, I don't know, weeks, months, just stacking Tesla. It was sick. It was sickening.
And this was years ago. This high yield ETF stuff just started coming out. So we didn't understand what it even was. We were just like, let's get in.
It seemed good at the time.
It did. Oh, totally. It did. You just, it's, and some people still think it's good. It's just a matter of preference. If you're going to stick your money in there and know that you're not ever going to pull that money out and you're taking in income, and use it for something. A lot of people will use it. I mean, I know somebody that uses it to pay his bills every month. He pays his mortgage and all of his bills with the payouts from high yield ETFs.
Okay, so how would you do that? You're going to retire, say, next year, and you want to pay all of your bills. You're going to have them. If anyone needs help with this, raise your hand if you need help setting this up. If you want to pay your bills automatically out of your margin account, how are you going to do that selling options?
That's a good question. I mean, you have to have your rules in place, and you have to have just your names, the names that you're comfortable with, the names that you've been trading for years. I wouldn't say jump in right now and then learn how to do it while you're, trying to be in it for years and know your names and know what you're going to do. And then also know when to cut a loss. That's my worst. That's what I need to learn how to do. You got to just cut losses. You can't hold and hope and wait. And I've got to learn that, because again, I'm still holding BMU and I'm down. I mean, at this point, I might as well hold it. I'm, basically at 80% down. Should have got out of it at 30%. And some people are even more, 20%, because that's what can take your whole portfolio as a bad trade.
Okay, so why don't you just buy a put on it?
I don't buy options anymore, because the second I buy a put on it, it's gonna recover. Crypto is gonna run to all-time highs, and I'll regret it. Now I am just selling covered calls. Under my average, under my cost basis, I'm just selling covered calls. I've got a little bit of money coming in every week, and eventually they'll get called away, and I'll let them go and take the loss. So
I have this thing I have the Spiteful Mutant gene, because I'm kind of on the same path as you. Like I hate taking the loss so much that I will extend my expiration way out just so I can stay above my cost basis and still collect premiums.
Yeah. You know what? Some of these, I'll do that with a cash secured put that's underwater. I'll do 100%. Push it all the way out till January 2028. I don't have a problem doing that. The problem is when these, like BMU, tank so hard and so fast, boom, you're assigned early, and you just wake up one morning and you've got all these shares. So you don't even get the opportunity to roll. Like they're just gone. I mean, BMU went from $34 a share, maybe even higher, but it was like $34 a share down to $1.50. Wild.
Okay, so what if there was a way that you could not worry about getting assigned because you were playing both sides?
Yeah, like what? Buying a put, selling a put, buying a put.
So say you, I don't know, you're long tech, but then you're short staples, and vice versa.
Yeah, but see, I'm a crypto bull, and I was definitely a crypto bull when I jumped in BMU. I was 100% sure that Ethereum and Bitcoin were going to run.
I mean, I get it. I've been in crypto since 2012.
Oh yeah, I mean, I buy Bitcoin every single day of my life. I've got an auto buy, so I'm still bullish, but I did not expect like a 50% drop or 40% drop.
Well, I mean, to be fair, all rewards come from when the market is risky. All rewards come from when you buy at a discount, not from when you buy the high.
Absolutely. I mean, the FOMO buyers of Tesla at 500, I can't even imagine.
That's insane.
And I know. And there's a lot of them out there, because they're like, oh, Tesla's going to 1,000, and it very well could. But right now, they're hurting. So right now, it's getting beat down, and people are scared. Oh, no, I'm not getting in Tesla. I'm scared. It's getting beat down. People don't like Elon. It had bad delivery numbers. Earnings are coming up, so on and so forth. Now's the time to buy. If you're a Tesla bull.
Mm-hmm. Mm-hmm.
I don't mean go all in, but DCA. Now's the time.
Yep.
Do the opposite. It's human nature. FOMO.
C4 Poppy, what's going on, buddy? He's got his hand up.
No, I'm doing great. It's a great conversation. I follow you both religiously. I'm still in the learning phase of options, and investor bonds got something going on probably next week on iron condors, and learning that the debit and credit spreads. It's next on my list to learn. Cash secured puts, so I'm doing calls. You guys using heavy margin for your accounts? Are you for your cash puts and everything? Are they cash secured, or are you using margin?
Tessa, you can go first.
Okay. Mine are cash secured, and I do use margin. Yes, but I use margin. I would call it safely, because I do have money in a separate account that I could cover if $1,000 margin, something under like BMU, let's say. do have $10,000 in a different account that I could move over, so I'm not paying interest or worried about a margin call, or if I get a margin call, I can cover it. So that's, in my opinion, that's the only way I would say it's okay to use margin if you have the money somewhere else to cover it.
Built-in interest and everything else if you've got that amount of cash put away.
Well, it is cash secured, but I'm using margin.
I see. No, I got it.
Yeah, and most platforms don't charge interest when you're selling a cash secured put and it's just being used as collateral.
It's just sitting there. Yeah.
Yeah, so you don't even get charged interest. I'm like, why wouldn't I use it at this point? I'm collecting interest with my money being in a separate account and not paying interest using their money. You just don't want to be assigned, obviously, if you don't want to pay interest. So you would just rule it out.
Yeah, no, that makes perfect sense. The other area that a lot of people on X are using to park their money is STRC for master.
That's the one I was thinking of.
I thought you might. It's 11.5% paying every month. It's trading around par. It goes under par. It's viable. It's par or above. I don't think that it is viable. I got in at the IPO. My average is only $89. Par is 100, and it's staying really close to 99, 90 cents. Dollar or 100.1. It's been very consistent. The only issue is that it can be called away at any time. Changes can be made at any time. It's a little different than a proposed law. It's not a treasury-based thing. It's a Bitcoin-based thing. So I've done very well with it. I've got some of my money parked there as well as ESCO. And just to gain that extra premium, ESCO is giving me about 4% roughly. TRC is giving me 11.5. So if you balance that average, it comes out to about 8.5, which is way above what you can get anywhere else. They're holding their cash. But I also had a stop loss on it at 92 in case anything ever runs or else, whatever. If he calls it, I'm going to make money on the call, which is fine. And I'm going to get that 11.5% throughout. I don't recommend buying it over par because it is callable at any time. And the cash secured puts, you answer my question on the margin. I'm building my cash position so that I can do more trade, and that's really what the holdup is. I did a cash secured put on Hood at 67. The other day, I got my $80 premium or what have you. It's not a lot, but it ties up $6,700. So I was told by Tropical Trader the minimum you should have is 10%, but I'm sorry, 10K. But I'm finding that 10K is just not enough to be doing multiple trades, multiple contracts because my cash is getting burned up. And that's where I thought that, maybe on a margin, if I've got the cash put away, if I went in on margin equal to what my cash positions are, I might be able to double the amount of trades. So it sounds to me like that may be an option for me.
I would think so, yeah. Yeah, and that's the reason a lot of people don't sell cash secured puts, because it does require a lot of capital. For one trade, like you said, one trade could be $10,000 in capital. Yeah. So I would, as long as you know your risks, and you know what you're using margin for, and you're getting into stocks that again you don't mind owning, you're not gambling. Then I would use it.
Yeah, I'm just old school. I'm 62. I'll be retiring in September. So I plan on using it as an alternative source of income to pay my taxes and pay some other things. My accountant gave me, really good advice, about taxes and everything. One is you put money back for it, but the good thing about paying taxes is you've made a lot of money. That's always stuck in the back of my mind. Would you rather make the money and pay the taxes, or would you rather not make the money and not pay any taxes? And it was rather obvious at that time. Taxes, not even though you want to minimize them as much as possible, not necessarily a bad thing because you have to look at the positive on the other side. At 62, coming up to 65, I've got things like IRMA on and Social Security and all those things to start looking at as far as income levels and such. So I'm doing a lot of what Cash is doing as my weighted income positions. I'm rolling those premiums over into zero beta stocks or stocks that